on and address some more numbers. Dodla Dairy is a company that we are tracking right now. Now, Dodla reported a good revenue growth for the quarter gone by. Gross margins were slightly compressed. To discuss this and more, we have with us Mr. Sunil Reddy, Executive Director and MD at Dodla Dairy with us. Mr. Reddy, good to have you on. Thank you for joining in. Just, for the benefit of our viewers, we're putting up the numbers. Revenue is up almost 21%. Your margin has moved from about 11% to about 10.6%. That's the EBITDA margin. And profits have done really well. Profits are up 53, 54%. So let's just talk about the factors at play. How has the quarter gone by been in terms of volumes and pricing? And, why is there this slight dip at the EBITDA margin level?
Thank you very much for having me on your show. Basically, what happens is we have three streams of revenue that we look at it as in Dodla. We look at Dodla Dairy India Limited, we have a Dodla Dairy Africa operation, and we have our cattle feed operation. The slight dip in the margin that came in is because we had two things that happened. One was in Africa, we have started a new plant in Kenya, which gave us a 40,000 litre volume, but didn't give us the expected margin because it was a very new operation. And also Africa had a little bit of a tougher summer where the milk prices didn't come down, which has been rectified. Going forward, it will also look much better. And another reason is we also had a little bit of inventory that we had sold, which was basically increase the top line, but didn't contribute much to the bottom line. But in an absolute number basis, we still grew in our profitability. So as a percentage, it came down because two streams of revenue which came in didn't have the kind of margin that we had. Therefore, it was a very small correction that happened. So that's the basic reason.
And what about the India business itself? So that you explained us sort of the issues at play in some of the international markets. But the India-based business itself, how do you describe the demand environment, volumes there, and what you're seeing in terms of pricing and margins?
So demand for the year gone by, because it was one of the highest price increases that the industry had taken. So a few of us did have to also look into it as number of packs increased, but volume per pack decreased in terms of, therefore a volume did come down, but inflationally the revenue went up in terms of the number that we earned as money in terms of rupees and paisa, not in terms of litre. But going forward, I think it's now stabilized. People have got used to it. And I think it will continue to maintain the growth trends that we had as earlier, of the 10% volume growths and value growth of around 15% will continue.
Sorry, could you repeat that number? The value growth is 15% and volume is how much?
Around 10% by volume it will grow.
And so this is a projection for... Sorry, this is a projection for FY25, the year as a whole?
Yes, FY25 is the year. No, not this is for the FY26. FY25 will be better because we had bulk sales. We had a new plant of Kenya coming into operation. This year is showing will continue to be at those 20% growth levels. FY25 would be around the 15% and 10% in terms of...
FY26 you mean? So FY26, 15% value growth and 10% volume growth.
Yes.
Okay, got that. Just want to understand, what is the current procurement capacity, and if you could give us an outlook on the expansion plans that are underway.
So current procurement, we're doing around consolidated around 17 lakh litres of milk procurement per day. We have now just announced that we are going to be setting up a new plant in Maharashtra where we're spending 280 crores and building out a larger plant there, which will have a capacity of close to around 1 million litres, which is around 10 lakh litres a day. For which I think by this year end also we are looking at enhancing our already existing 2.3 lakh litres per day milk procurement to at least 4 lakh litres a day of milk procurement. So we are looking at our milk procurement moving towards the 20 lakh litre per day mark. And on an average, maybe it will be slightly lesser, but we will at least touch the peaks of 20 lakh litres a day. In the short
when do you get to 20 lakh litres a day?
In the short term, it should be mostly by this year end in the peak.
Oh. Okay, by the end of perhaps this year itself. Got that point. Just a sense on how margins will improve. I mean, you explained some of the other issues because of which Q3 was impacted. But how do you see this resolving itself? And then you're looking at more value-added products as well. So overall, what could exit margins look like for FY25? And then as you look forward to the new fiscal, what's the outlook?
So the exit margins for FY25 will remain status quo in terms of we are trying to maintain it at what we have as our existing margin levels. Because if we get any benefit of even further margins, we are trying to pass it on to the customer because we do not want the customer pricing to go way too high even to affect their consumption patterns. I think we will try to maintain these double-digit margins as we go forward, exiting in 25 and for 26 also.
Okay. And in terms of key target markets, market share, expanding your distribution network, give us a bit of a geographical sense in terms of how the next, perhaps a few quarters will play out for you.
So basically, this geographically, we will still be increasing our depth in areas where we are already operating for the year 25-26, because we're not looking at much of new geography. We still have a lot of blank spaces in the areas where we are operating itself, which we will be filling those and going ahead and getting those operational going. We are confident that our feed business, which is now the new plant, which has come to 30% capacity utilization, will reach its 50% capacity utilization. And our Africa business also, which has done extremely well, will also grow by another 10-20%, because in Africa, the Uganda market, we are becoming the market leaders, and also we'll try to do the same in Kenya, which will also give us another 50-60,000 liters of growth in Africa. So a combination of all these three will give us our growth. In India, I think we are looking at our Maharashtra plant coming into operation in 18 to 20 months' time from now. So I think that will cater to the next year after that growth. Mostly the 27's growth will come from Maharashtra.
Okay, all right, got it. We will watch out for those products as they sort of, are in the distribution channels here in the state. We, of course, are talking to you from Maharashtra itself. Thank you so much for joining in, and good to get that perspective on the business. By the way, while we were speaking to the management of Dodla Dairy, look at Nestle. Nestle's margin picture has been really loved by the market. The stock is soaring away, 6% higher, and they've done better than the estimates. And the market's absolutely saluting that. You don't get FMCG beats too easily in this environment. And this is one that has happened. Healthy growth led by a combination of pricing and volume. That's the commentary coming in from Nestle. More on this as well as we come back. But we'll have to take a quick break. More on the markets in just a bit.